Regional bank Western Alliance giving investors some good news this week, saying Tuesday it added $2 billion in deposits during the first 2 weeks of April. Is sending shares soaring. Western Alliance currently up more than 20% today. Wedbush Securities upgraded the stock from neutral to overweight. The analyst behind that note, David Chiaverini, joining us now. David, good to see you, sir. Why the upgrade?
Yeah, you hit the nail on the head. Deposit trends were better than expected. The stock had been trading as if it was facing a significant bank run, and it did partially in the early days of March, but clearly it stabilized. It stabilized by 1 to 2 weeks after SVB went down. And as you noted, deposits quarter to date are up $2 billion. So, and then they gave guidance looking forward of $2 billion per quarter, and that equates to 20% growth annualized. So it does seem like the worst is behind the company.
David, are all the problems when it comes to Western Alliance, some of the fears out there, is that totally in the past, or do you expect maybe to see some of that fear creep back into the stock here over the next coming weeks?
Yeah, fear could always creep back in, especially when it comes to the banks in this backdrop. Looking at where the stock had been trading just as of yesterday's close, it was trading at 4 times our earnings estimate. So very cheap. And we felt that enough risk was kind of baked in, or bad news was baked in enough to that valuation that we were willing to, take a risk on upgrading it. But looking forward, we still haven't seen a resolution around First Republic. So we'll see how that goes. So that could be another, issue that could weigh on banks in coming weeks. But at least for the near term, as we go through earnings season, the theme so far has been less than feared. And I expect that to continue. Now, looking out to May and June, that's when the narrative could shift back to some of the concerns that have been facing the banks in terms of deposit costs, regulatory issues, and loan growth could also weigh on the group.
Yeah, I mean, you've got the price target up to 50 from 38, but this was a $75 stock 6 weeks ago. Is that indicative of how much damage was done by this banking crisis?
Yeah, it's a good point. For instance, they had peaked at their deposits mid-quarter at $61 billion, and they just put up that at March 31st, it came down to, $47.5 billion. So down almost 25%. And then on top of that, you still have a very intense environment for competition around deposits. So funding costs are going up for Western Alliance and the overall banking industry. And I am concerned, I think bank investors are concerned that we're not fully out of the woods from a credit quality standpoint. So as the economy potentially slows, as banks pull back on their credit availability, it could weigh on credit quality, and Western Alliance would be in the mix there too.
So, David, you like Western Alliance. You also added M&T Bank, Regions Financial, New York Community Bank Corp. to that list of best ideas. Is the common thread there insured deposits, or what do you like about those banks in relation to Western Alliance?
Yeah, for all of them, they do have above average insured deposit levels. Regions Financial, they're up at 75% of insured deposits. Western Alliance is now at 73% insured deposits. M&T Bank, they already announced earnings earlier this week, and I would put it in that category of less than feared. Net interest income guidance was lowered to 20 to 23% growth for this year. They had been expecting 23 to 26%, so down modestly, but I think it was down less than what the market had been pricing in for them. So we are expecting deposits to stabilize for them. And then looking at their outlook for net interest margin, they've locked in a net interest spread of 3.6 to 3.9, down from 4%, even if interest rates were to plummet back towards the 1% level. And that theme is very similar for Regions Financial as well.
David, the Fed in the last hour out with the Beige Book, which reads in part, several districts noted that banks tightened lending standards amid increased uncertainty and concerns about liquidity. When will we get a sense that its coast is clear in terms of the crisis and its impact truly being felt and behind us?
Yeah, I think that's going to take a while. In fact, the Senior Loan Officer Survey, the next installment of it, will come out in the first week of May here in a couple of weeks. And I fully expect lending standards to show tightening in that survey as well. And I don't expect a loosening to occur until we get through the looming potential recession and this cycle. So I'm thinking we're probably 12, 18, 24 months away from a full loosening. Now, granted, a lot of consumers and businesses have significant cash cushions set aside. So that would be potential for, a soft landing. But barring that, looking at how much monetary and money supply is coming out of the system, that could weigh on the overall economy and banks. But it could take a while either way you slice it.
All right, David Chiaverini, always great to get your perspective of Wedbush. Thanks so much for joining us.